Taking a look at today's interest rate markets, let's look at the 10-year note futures today as they're realizing a nice move higher once again today. We're seeing this upward momentum continue, and with that, we are seeing the 10-year note futures trading at the highest level in 2.5 months now, 132.31 on the June future. And when you look at both the June future and the September future, the volume, big increase in volume. So this upward momentum in the futures markets today is being supported by a significant increase in volume as well. So I can tell you, when you look at, I think, why we're seeing this continuation in strength in the 10-year note futures, a couple things. Fed officials continue to be very dovish in their messages that they deliver in various forums over the last couple of days, indicating that they still feel that the inflation situation is going to be transient, that their policy continues to be consistent, and that they expect to maintain that policy for an extended period of time. And with that consistent message being delivered in a dovish tone, the market's certainly realizing that, and it appears that it's impacting the market as you see the bids coming back into the back end of the curve. Couple that with some of the data points recently, a little bit more of a moderating, I should say, I guess, as you see the U.S. data points here the last several days coming in below expectations for the most part. And I think that's another factor why we're seeing these interest rate markets continuing to benefit from some of the recent trends. And when you look at the 10-year note futures now, we're seeing that yield down to 156 basis points. So trending lower once again today and finding itself back into the middle of that 150 basis point range. And also, when you look at the curve today, we are seeing it shifting lower. So we're seeing the back end of the curve being bid up more so than the front end of the curve, and therefore pushing those yields lower in the back end of the curve and shifting that yield curve, flattening that yield curve out a little bit more today as we continue to see that evolve over the course of the last week or so.